Crypto winter is upon us. At least that is what the mainstream media is saying. A lot of pessimism and fear in the cryptocurrency markets right now. And the reality is that yes, crypto is in a very bearish time at the moment. Now, I have frequently said here on the channel, I've made many videos on it over the last few weeks, talking about how I think we are still going to have a great 2022, how I think that there is some great catalysts upcoming for the cryptocurrency markets overall, how I think that we're going to go and see new all-time highs this year. That being said, right now we are in a bearish period for the cryptocurrency markets. Bitcoin, Ethereum down 40-50%. Bitcoin's not even anywhere close to the 200-day moving average, which is of course our key bull bear line. And to get back above that to say, yep, bulls are back in charge of the market. Right now, bears are driving the car. Altcoins decimation is probably the best way to put it. Many altcoins down 60, 70, 80, 90%. It's been pretty brutal. So in today's video, I want to talk about how I am approaching the market right now. What are my survival strategies to make it through the crypto winter? My name's Lark. Every day I make videos talking about cryptocurrency investing. So if you do like that topic, you enjoy hearing about it, you enjoy keeping up to date with crypto, a little tappity tap on the thumbs up button would be super freaking cool. By the way, every week my team and I produce Wealth Mastery. This is a cryptocurrency investor report. Every single issue, you're going to get a step-by-step DeFi tutorial, an altcoin report, portfolio updates, airdrops, NFTs, news, tips, tricks, much, much more. Sign up for free using the link down below in the description. You can also go premium for less than $10 a week. Now let's go ahead and get into this topic, and let me get my coat off here before I die, because it is actually pretty hot in here. So let's start off by talking about yield farming. So would you believe that you can still get some really great rates yield farming? Now, yield farming, this is when you take your stable coins or maybe your Ethereum or whatever, and you put it into a DeFi application to basically get free tokens or earn more of the same tokens that you've put in there. Very popular way to make money in crypto. Huge gains have been had doing this exact thing over the lost couple of years. It's going to continue. You can get great rates on your stable coins, easily find 20, 30, 40%. Lots of great yields out there. Now, one of my favorite farms has been Convex Finance over on Ethereum. I've been farming CVX and CRV tokens. I'm bullish on both of those DeFi platforms. I have been taking profits on those on a regular basis, basically taking the cash from the yield farming profits. That being said, Ethereum, pretty harsh on the fees. Now, you can actually use something like Wire and Finance over on Ethereum, which is a yield aggregator. Now, that allows you to have basically yield farming with much lower gas fees on Ethereum. However, pro tip here, if you want to have basically non-existent fees, there's still a tiny, tiny, tiny fee. But, super, super cheap fees, go and use something like Wire and Finance, but on the Phantom network. Higher rates for Bitcoin, higher rates for Ethereum, higher rates for stablecoins, and gas fees, tiny, 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 tiny gas fees. Makes a big damn difference. So that's something to check out. I've also been farming, of course, a lot of gaming and metaverse coins, things like Illuvium, High Street, Wilder World. I've been farming all these with Ethereum pairs. So it'll be like 50% Illuvium tokens, 50% Ethereum tokens. You put that in the liquidity pool. They give you a liquidity pool token. You go and stake it on their platform, and then you get some pretty sweet rewards for doing that. You have to keep in mind, impermanent loss is always a big risk to keep in mind. I just exited a pool the other day for just a sweet little 12 Ethereum loss. Nice. Now, obviously, the point there is that, yes, I had the impermanent loss, but hopefully the truckload of tokens that I farmed are going to be worth way more than the impermanent loss. That is the idea, anyway, when you get into these yield farms. Now, higher risk options are doing either something like a token dollar pair or a token Ethereum pair. You're much more likely to experience impermanent loss in that situation. If you want to avoid impermanent loss, as much as you can anyway, look at a stablecoin pairing. So like USDC, USDT. You might not get as high rates. Often you don't, but you have a lot less risk in that situation as well. So something to think about. Now, a note, if we do enter an extended beer period, yes, that's the kind of market. Let's do the beer market, guys, not the bear market. Anyway, if we enter an extended bearish period in the market, some of these yield farms, you have to realize, are going to get absolutely crushed. Now, impermanent loss can be very rough in some of these farms, and some of these coins are going to go to zero if we do enter into a very bearish period for the market. So just keep that in mind. That's why stablecoin farming is a lot safer. So even if you farm a bunch of tokens and they go, to zero, whatever, you haven't really lost anything. Maybe you've lost some opportunity cost on what you could have been doing with your stablecoins otherwise, but you didn't actually lose a bunch due to impermanent loss in the farms. So I'm still yield farming. Yield farming I still think is a great idea. I've been doing great profits from yield farming. I will continue yield farming. I'm happy yield farming, but there are risks, so do be aware of that before you go and ape in without thinking about it. A much safer option is lending. Now, lending, you don't have the impermanent loss risks. I guess the platform can always get hacked, and that's a problem because they are custodians of your assets while they are there. But I'm using Celsius currently to lend my Bitcoin, to lend my Ethereum, to lend some USDC, and to lend Polygon. Now, it's not all my Bitcoin, not all my Ethereum, not all my USDC. It is most of my Polygon anyway, but it's pretty safe, simple platform. You just deposit your crypto. Every week you get paid out. It's pretty nice. You get paid out in the asset as well. So you deposit Bitcoin, you get paid in Bitcoin. Deposit Ethereum, you get paid in Ethereum. So it's a pretty cool way to be earning some extra yield on your crypto, especially if you're just taking the long-term perspective. You want to hold long-term. You just park your crypto there and you just make more Bitcoin. You make more Ethereum. It's super freaking easy. It's a pretty nice way to do it. So I'm also using Celsius. Yeah, I don't have as much in something like Celsius as I'm using in DeFi, for example, because I think you get better rates out there, but it's a nice way to diversify my crypto strategy. Another way, obviously, gem hunting. So, look, one of the big ways in crypto that people have made a lot of freaking money is hunting out those gems. And look, right now, it's potentially juicy time in the market. A lot of those hot cryptos that you were buying the top on 2 or 3 months ago, well, they're now down 60 or 90%. Could be an interesting time to buy those. Can they go down another 60 or 90%? You bet your buck they can. They sure can. Oh, yes. They sure can. That doesn't mean they're going to, though. However, with that in mind, don't go all in, right? Never invest more than you can afford to lose, all that jazz, right? Start averaging in to some positions, right? Accumulate, wait, take the long-term perspective. The markets will go back up at some point. The only question is how long that's going to take. So if you have those really, those coins, you're like, oh man, I wanted to get in on this metaverse. I wanted to get in on this gaming coin. I wanted to get in on this DeFi protocol. Start accumulating. That's what I've been doing, right? So I have been looking for, those under the radar gems or things like this, coins that I'm quite into already that, I've just been accumulating those. And look, you don't have to necessarily be accumulating just gems. I've been buying Bitcoin and Ethereum. In fact, most of my money during this period has actually been going towards Bitcoin and Ethereum. There have been a couple other coins, like I bought some Trader Joe the other day. I bought some of the Looks Rare token. So I've been playing around with those things too. But now is a good time for gem hunting, for dollar cost averaging into those coins. Do of course be aware that if we enter an extended beer period, it's the beer market now, it's not the bear market anymore. If we enter a beer period that's going to last for a long time, some of these coins could go to zero, so never invest more than you can afford to lose. That's obvious. Very, very true. Because remember, the market can remain irrational longer than you can remain solvent. Now, the next thing we're going to talk about here, of course, is diversification. Crypto's awesome. We love crypto. I know most of you guys are just crypto investors, but me, I'm not. I actually really like investing in stocks. I think stocks are pretty gosh darn cool. I know they can be boring compared to crypto, but honestly, there's so much exciting stuff going on in the world. I want to have a part of the electric vehicle revolution. I want to have a part of the autonomous vehicle revolution, of AI, of the future of food, all this stuff that's going on. It's exciting. The space industry, so much stuff. I love some of the stocks that I own. And of course, you can also invest in more boring stocks too, right? So you can invest in, like IBM or something. Still, a tech company, but pretty boring, when it comes down to a nice little dividend stock, which also is nice because when the tech stocks start to dump, your crypto starts to dump and all that stuff ends up being a bit correlated. But you have these kind of safer stocks in your portfolio and they're not as correlated. I also own a bit of metals, which, they don't do very much. Just have a few coins sitting around just because I like the coins. It's not a massive part of my portfolio or anything. And of course, properties are another interesting area to look in for diversification. I still haven't bought my first rental property. I want to one of these days. It's on the list of things to do. But I do invest in real estate investment trust, REITs. So even when I get my rental property, that's a residential rental property. Pretty different compared to the REITs that I invest in. So I have like a data center REIT, a renewables REIT, a REIT that focuses on like factories and stuff like this. Look, I'm never going to buy a factory and then rent it out to somebody. I'm not going to run data centers. But with a REIT, I can get access to the property market in these interesting verticals. So I like that. It's a nice bit of diversification, again, for my portfolio. So don't be afraid to diversify your portfolio. You don't have to be all in crypto. We know that crypto has an incredible upside potential. That being said, other industries do too. EVs, AI, all that stuff is also going to go crazy. Next up, let's talk about cash. Yeah, cash, man. That's that time in the market. Let's talk about cash. It's important to have a cash position. I know we mentioned stablecoins up above just briefly, but look, having a decent cash position, super important for any market condition, honestly, but particularly in these kind of market conditions, because here's the deal. A lot of crypto comes down to simply freaking surviving. If you can't survive and your back's against the wall and the market's down massively and something happens, there's an emergency, you need cash, you don't have any cash because you're all in on crypto, you have to go sell your Bitcoin. And by the time you can rebuy it, well, it's already up to 300% and you're on the sidelines. Not a good feeling, not a good thing to do. You need to have cash on the side. Yeah, having a cash income, that's great, but realistically, what would happen if you lost your job tomorrow? Or whatever your main source of income is. Maybe you got some investments or something. What if those weren't there tomorrow? Would you have enough cash on hand, for example, to get through 6 months? If you don't, then look at starting to build that fund up. And I know it's boring. Oh, my cash is sitting there. Cash is trash, Lark. Why would I want to have a bunch of cash sitting around? I know. But realistically, you need to have cash because you got to pay your electricity bills. You got to go buy food and all that stuff. It's good to have that cash on hand. The good part is that when you have that emergency fund, that 6-month emergency fund, you can take it and put it in something like Celsius because you're not going to get any yield on it at the bank, but at least if you put it in Celsius, you're actually going to earn some actual money on it. Put it in DeFi if you're willing to take a bit of risk with that money, which, it's a different conversation, but again, you're going to earn a bit more money on that still. So this allows you to have the cash necessary to go through rough times in the market. And also, if you build up an even bigger cash fund, then you can, buy the dip when it comes around, right? Without actually eating into your 6-month fund, have a year fund. And then, hey, when you have great opportunities in the market, use a couple months of that to buy the dip, right? So it allows you flexibility within your portfolio, which is why I always have a decent cash position. I am balls deep in Bitcoin, believe me. But I always have a good cash position. I have a lot of stable coins. I got cash in the bank, earning basically nothing, but you got to pay for stuff from time to time. So there's some cash sitting there. A lot of money in stable coins. Farming, like on Convex Finance, for example. Lending in Celsius. It's nice. You have a little engines there making you more money all the time. And of course, when all else fails, you can do a tax loss harvest. Yeah, that does happen sometimes. Look, I know we all want our altcoins to go to the moon. We want them to be the perfect companies that do the perfect things and never screw up and always deliver technology on time. That's not how it works in the real world, man. Some of these companies are going to go to zero. Some of these companies are going to screw up, exit scam, fail to deliver technology. The developers are going to sleep with each other and break up. You don't know what happens, man. It's humans. Humans are messy. It's what happens. And you have humans running these companies, people behind the protocols. Yeah. Once in a while, you're going to lose on these coins. And you know what? You're going to sell at a loss. It happens. It happens. It's true. It happens. And sometimes, depending on your jurisdiction, when you take that loss, you can actually use the loss to offset your tax burden on the gains that you had. Nice. Nice. So this is something I did recently. There was a coin that I bought. I wasn't necessarily intending it to be like a long-term hold or anything. I bought it based on the idea of like, hey, there's a trending sector. Let's see how long this trends for. Let's see if this can catch that wave and ride it. It did not. I sold it at a bit of a loss. Not a big deal. Get a little bit of tax write-off on that. Sweet. Sweet. Now look, main point here. Main point. A lot of people like to buy low, buy high and sell low. It's the exact opposite of what you should be doing. Remember I was always saying, take profits, take profits, take profits, take profits. Now's not really the time to be taking profits. I was saying that more a few months ago. Now is the time, for me anyway, again, you'll make your own decisions in life, but for me, it has been a period for accumulation. I've been buying Bitcoin. I've been buying Ethereum. In fact, I'm buying Bitcoin every 2 or 3 days during this period. Not massive amounts, right? I'm not going all in. Just chilling. Nibble, 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 nibble. A little bit of Ethereum over here, nibble, nibble here. A couple altcoins here and there. Mostly Bitcoin and Ethereum. I'm accumulating. It's the time for accumulation. I took a lot of profits on altcoins when they were pumping. Now we are in this bearish period in the market. I'm accumulating. That's how it works. Buy low, sell high. Guess what? The market's low now. It's that simple. It's that simple sometimes, guys. That's the only thing that's changed about really my approach to the market right now. All the other stuff, it's normally stuff I do anyway. I'm always yield farming. I'm always lending. I'm always gem hunting, right? But right now, other than a couple of very strategic tax loss harvest things, I'm not selling my crypto. I'm buying more. When the market's mega bullish again, I probably won't be buying anything. Maybe a couple things, short term, whatever, but I'll be selling. That's how it works in the market. Simple to sit here and say it, hard to do when it actually comes to clicking those buttons. So the good news is, I believe that the market is going to go on to have new highs in 2022. So if you missed taking profits back in, 2021 at some point, you're going to get another chance. So watch out for that to happen. Anyway, just my 2 stoshis for the day. You let me know what you think about all this stuff down below in the comment freaking section. Thanks so much for watching today's video, and peace out till next time.